Hello investors and future investors, welcome to the channel. For today's video, I'm going to show you how to use LEAPS option in order to make consistent income, and that consistent income is going to help you supplement your regular 9 to 5. Now, if you're new to options trading and you want that one option strategy that can be used over and over in order to grow your portfolio consistently over time, then continue watching. And by the way, welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to show you how to use LEAPS option in order for you to grow a small account portfolio and make consistent income over time. Now, here's what we're going to do. I'm going to first of all show you how to pick up LEAPS option in your portfolio. And I'm going to show you two criteria I use in order to find the right LEAPS option. Then I'm going to show you how to use that LEAPS option you picked up in order to make consistent income safely over time and grow your small account portfolio. Now, let's go ahead and we're going to get down and dirty with options. For today's video, we're going to be using advanced micro devices, better known as AMD. So let's go ahead and get the option chain open by going down to the bottom and hitting trade AMD options. Now that we have the option chain here open, just for you guys that are new to the channel and also new to the video, the option chain is this area down here. Now what the option chain does is that it gives you enough information in order for you to make an informed decision before entering any option contract. So now that we're here, before we go ahead and get down and dirty with options, I would like you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. And favor number two, always make sure you have an exit strategy before entering to any options contract. That being said, let's go right ahead. So in order for you to pick up a LEAPS option, we must first go to buy and call on the option chain. Now we're going to go ahead and we're going to select our strike date. In order for it to be a LEAPS option, it must be a year out or more. Now, it can be a little less than a year, and that's going to be depending on the strategy you want to use. Now, we're going to go ahead and we're going to choose the December 19th, which gives us 288 days to expiration. So this one is going to work fine as well. Let's go ahead and select that. Now we're going to go ahead and we're going to choose our strike price for our leap. And that, we're going to go ahead and choose it below the strike price. Pay close attention to the strike price. The strike price right here is $99. We will be revisiting the strike price as the video goes through. Now, how do I choose my strike price? Well, I will tell you this. These strike prices here, the $90 strike price, the $85 strike price, and the $80 strike price, they're all perfect strike prices that can be used. The ones you're going to choose is going to depend on your portfolio size and what you want to achieve. So the $90 strike price here is going to charge you $22.70 in order for you to acquire it, meaning you're going to have to pay $2,270. The next one, you're going to have to pay $2,530, and the next one, you're going to have to pay $2,880. So based on your portfolio size, then you and you alone are going to be able to decide which one of these LEAPS options you're going to pick up. The next criteria you could use in order to pick up a LEAPS option, according to my personal preference, I like LEAPS option that about 0.7 delta. You can see the delta up here. 0.7 delta or higher. 0.69 is pretty close. And as we go down, you're going to get 0.73 and 0.77. Now, me personally, if I would pick up another LEAPS on AMD, I already have AMD LEAPS in my portfolio. But if I were to pick up another one, I would definitely be going with the $80 strike price. I'm going to show you why. So now I'm going to go ahead and show you the criteria I use in order to decide upon the $80 strike price. But once again, I said any of these prices are going to be good. Now for that, we're going to go ahead and we're going to stay on Robinhood and we're going to use the Robinhood charts. So we're going to go to the AMD screen and we're going to go to the advanced feature to your top right here. Let's go ahead and get that open. Now we're going to go and we're going to change our criteria, the dates to the top. Let's go 1 year out because we're going to be dealing with LEAPS option. Now with the 1 year chart, you can see the prices down here. Now if you place this straight line right here and you follow the line, you're going to see there's no level of support or resistance beyond that line. So that just tells you you're going to need to go out just a bit further. So let's go to the 5-year mark. Now, with the 5-year mark, if you put the line here once again, you're going to see, let's go ahead and put it all the way to the top. So right here, you can see that there's a clear support and resistance right here. So the line right now is at the current price, and if you just follow the line all the way down, you're going to see clear support and resistance. Now, if AMD does decide to go below that, let's go down, you're going to see the second level of support is going to give you around the $78 or $80 mark. Hence, I chose the strike price of $80. So if the stock does continue to go down, it's most likely going to hit the second resistance, which is going to be $80. Now, that's just one criteria I use in order for me to make a decision of what strike price I choose. Now, right before I show you the second criteria I use, here's some additional information I'm going to give you. Now, the price right now is about trading at $100. If AMD were to go down even further, let's say it goes past the $90 mark and it goes down to the $80 mark, then you're going to be down $20 per share. However, if AMD does start to go back up, it could go all the way up to $150 and may even continue further. So I said that to show you the stock right now has more upside potential than it does downside. So in my opinion, it is worth the risk. Now let me go ahead and show you a second criteria I use in order to make that decision. So here we are on stockcharts.com, and this is just a free resource I use because I find it easier to read the graph. Now, as you can see, I've already selected AMD. And what we're going to do now, we're going to go ahead and I'm going to show you the second indicator I use in order to make a decision. And that's going to be the RSI indicator. Now, if you look to the right here, you're going to see the RSI is $32.43. If you don't know what the RSI is, feel free to search the channel in my videos for a video entitled RSI. That is a detailed explanation of the RSI and how it can be used in order to get into any option strategy. So, an RSI close to the $30 mark indicates that the stock has been oversold. Now, if a stock has been oversold, that means there's a good opportunity to pick it up at the oversold territory. However, when buying LEAPS, the best time to buy LEAPS is going to be right here after the stock starts to show clear signs that it's going up. So right here would be a perfect time. Right here would be another perfect time here as well. Just make sure you wait until the stock shows clear signs it's going to go up before getting into the LEAPS option. Now, so because I've already seen using the Robinhood charts, the next level of support for AMD, if it breaks past the $90 mark, is going to be the $80 mark. So now I'm using the RSI and it confirms that it's trading around a $32 RSI. Then I have way more confidence in order to pick up this LEAPS option. So we're going to go ahead and we're going to pick up the LEAPS option. And that, just to confirm, is going to be the $80 LEAPS option. Now, another thing I want to bring to your attention, this number right here says $108. The $108 represents your break-even price. So once I pick up this LEAPS option, Robinhood is telling me I could go ahead and make consistent income using this strike price or higher, and we're going to get into that in just a second. The price I'm going to be paying for this LEAPS option is going to be $28.80. Just keep that in mind. Now, let's go ahead. I'm going to show you how to make consistent income now that you have the LEAPS in your portfolio. And for that, we're going to go to sell. Then we're going to go to call. And now we're going to adjust our strike date. Now, the strike date I'm going to be using is going to be March 21st, which gives me 15 days to expiration. Now, if you choose, feel free to go ahead and use March 14th, which gives you 8 days. This is all based on our own personal preference. The reason I chose 15 days out or about 2 weeks is because I know AMD fluctuates a lot during the short term. So let's go ahead with the March 21st. Now I'm going to go ahead and choose our strike price in order for us to make income. So remember that price I showed you, the break-even price of 108. That's going to give us $107 strike price. So if you're new to options, you could use the $107 strike price in order to sell covered calls. This option strategy you're going to be using against your LEAPS in order to make consistent income is known as the covered call. However, for my personal preference, I like to go a lot higher. And the strike price I will be using is going to be $112 strike price, and I will tell you why shortly. Now, with the $112 strike price, I have a very high chance of profitability, and that's a 90% chance of profitability. The reason why I would choose the 112 is because AMD is what's known as a runner. This stock moves very, very fast. So this stock could get to 112 in no time. So the whole point of you acquiring a LEAPS option in your portfolio is in order for you to make consistent income. You cannot make consistent income if your LEAPS option is called away from you. So try your best to choose strike prices that gives you a high chance of you retaining that LEAPS option, and you're still able to make some kind of decent income. Now, because this is a sell and this is a call, you're going to be making some type of income. The income you're going to be receiving for this strike price is going to be $56. Now, I know you just spent $2,880 in order to pick up a LEAPS option, and now you're making $50 every 2 weeks, which does not look like a lot. But I guarantee you that is a lot of money. If you were to divide your $56 income by your $2,880 that you paid for the LEAPS option, that should work out to be 1.7%. If you're able to make 1.7% consistently from the comfort of your own couch, that is a win-win situation. That means you stand to gain around 3% or higher every month. Once again, that's a very, very good return. Now, you continue to do this until you're assigned your LEAPS option. Now, the only way you could be assigned on your LEAPS option is if at expiration date, this share price right here goes past your strike price right here of 112. If that happens, Robinhood or most of the other brokers, they're going to close off both options simultaneously. And what you're going to be receiving is going to be the credit between your LEAPS option and your sell call. Now, let me show you why this is such a powerful option strategy to use if you're trading with a small account. If you're trading with a small account and you want to buy 100 shares of AMD, it would cost you $9,900. If you were to buy a LEAPS option, that would cost you $2,880, which represents less than a third of the price. Now, if you have 100 shares and you pay $9,900 for it, you could go ahead and sell covered calls. Now your percentage return is going to be a lot lower. So now it's going to be $56 divided by $9,900. With the LEAPS option strategy, you're able to pay a lot less, so your returns is going to be higher. Now, the other reason why the LEAPS option is such a powerful option strategy is because of the gains you could get. Those gains are going to be stock appreciation. Although it's a LEAPS option, you can get stock appreciation, and let me show you why. Now, I did ask you to remember the share price of $99. So let's say you did acquire the LEAPS option when the share price was $99, but now the share price goes up to $112. The difference between 112 and 99 is going to be $13. Now we're dealing with options here. You're going to multiply that $13 by 100 shares, and that's going to give you $1,300. So that's another reason why you need to trade and sell your covered calls at a very conservative price with a high chance of profitability. So if the stock does surge and you lose your LEAPS option, you don't mind very much because you still stand to gain the stock appreciation value. Now, one last tidbit. If you have a bigger account, then feel free to pick up multiple LEAPS of any stock that you favor in your portfolio. That's going to allow you to grow your portfolio even better at a more exponential rate. Now, let me just summarize it for you. The LEAPS option strategy is a powerful option strategy that can be used even if you're trading with a small account. The LEAPS option strategy allows you to buy a long call for a third of the price of what the stock is actually trading at. Once you acquire that LEAPS in your options portfolio, then you're now allowed to use that LEAPS option in order to sell consistent covered calls. That consistent covered calls is going to give you consistent premium. That premium is yours to keep no matter how the trade goes. That premium is what helps you to grow your small account portfolio. In addition to your consistent option premium, if the stock were to spike up in price, then you're going to benefit from what's known as the stock appreciation as well. Now, remember, not all that glistens is gold. There is still a chance that the stock could go down in value. If the stock goes down in value, that's fine. Remember, you have a long-term outlook on your LEAPS option. That's why you bought it out with a far expiration date. If the share price does go down, continue selling covered calls. As the price appreciates again, just keep increasing your strike price or your chance of profitability as you continue to sell covered calls. And that is why LEAPS are a very huge part of my portfolio. Now, if you guys made it this far into the video, then you guys are the real option traders that want to learn. On this channel, my main focus is to try to help anyone out there with a small accounts portfolio. When I started trading option, there was not enough information out there in order to help me grow my portfolio with these safe, consistent strategies. So if you guys have any questions or you guys want to join the weekly income team, then the link is going to be in the description below. Go ahead, like the video, subscribe to the channel. Please turn on your notifications so whenever I post a video, you're going to be alerted right away. And most importantly, if there's anyone out there you know struggling to grow a small account portfolio or trying to get some additional income to support their regular 9 to 5, then feel free to go ahead and share this video with them. Let's help as many as we can. And until the next video, keep pushing your investments.